Good evening, all the joinees. Hi, this is Ansu. I welcome you all to the webinar conducted by NGEN Markets. By the time the others join in, let's have a look at today's webinar topic. So, today we will be primarily focusing on the performance comparison of mutual fund schemes, meaning comparing performance of mutual funds with each other. The first topic that we will be looking upon, or rather focusing, would be the comparison of these funds with their respective benchmarks as well as the category average too. We would be looking upon certain parameters pertaining to risk and returns of each of these funds with their benchmarks and category average. Followed by that, we will be looking upon the risk versus return scatter plot, wherein basis the x-axis would be the risk and the y-axis would be the returns, annualized return. And basis risk and return, we would see how are the funds getting plotted onto the scatter plot. Followed by that, we would be looking upon overlaps and rolling analysis. Overlaps would let us know the common underlines, common stocks between every two fund, to what extent two funds have similar portfolios, and rolling analysis would let us know the consistency of each of these funds that we were looking upon basis the rolling period that we set in. And lastly, we will be looking upon scenario analysis in the point to point tab, which lets us create in customized scenarios, customized time periods of our own, and see the returns that could be given up by each of these funds. And lastly, the quorum would be open for a Q&A session. You could either unmute yourself or type down your queries in the chat box. So let us begin. So this is our NGEN Markets landing page, which is the Markets tab. For today, our topic related webinar, we'll move towards the fund section. Now, this is the section wherein in the screener tab, you could see list of all the mutual funds that are currently trading in the market. You can anytime set in filter parameters, select a category of fund, and shorten down the list of funds that you are looking upon. How do you go about it is just by clicking on this filter categories. You could see four buckets would show up. These are typically the asset classes, and within each asset classes you could see their SEBI categories as well. You could select multiple categories at the same time, and once you select a category, you would anytime have an option to apply filters right here. Now, in the screener section, you could see that in terms of filters, there are just 5 filters that could be used. First being the AUM, followed by the age, followed by the yearly returns, value at risk, and the Sharpe ratio. Now, this in this section, only 5 filters could be set in, and here as well, only the minimum range can be set in. Meaning, my lowest range is something that I could set in. However, here you do not have an option to set a maximum range, meaning a from to to range is something that you could not set in the screener section. And this is resolved in our query tab, which is a robust or an advanced version of the screener, wherein you could create in multiple conditions, basis multiple parameters, and create your own queries. Now, as I mentioned in the screener, there are just like 5 filters, whereas in the queries, every column that you see in the screener, once you scroll towards the right, there are multiple columns, return specific columns, risk specific columns. All these parameters could be used as filter parameters in the query section, wherein you could also set in a minimum to a maximum range. So we'll create our queries in the query tab. You go to the query section. First thing is you select the type of fund that you're looking upon. You click on this drop down. You either select direct or regular fund. I'll go forward with regular fund. Once that is done, you come to this section of select statistic filter. Now, as I mentioned, here the filters would be the columns that we see in the screener. And once you click on this drop down, you could see all those column headings right here. So these are return specific filters, risk specific filters that you could use at the moment. Now, let's say I wish to create a query of large cap funds. So I have created a Word document wherein, let's say, I wish to look upon large cap funds whose AUM ranges between 5,000 crore to 65,000 crore and whose minimum age is 5 years, meaning it has been in the market till at least 5 years and their volatility ranges between a 15 to a 25 percentage. So how do you go about it is I again go back to the NGEN Markets query page. I'll click on this drop down, and since large cap is a SEBI category, I'll select this SEBI category. Once you do that, here just below that, you will be able to see list of SEBI categories once you click on this drop down. Now I need to locate large cap, so I'll just click on L and I'll locate large cap right here. Just click on that, and all you need to do is click on add condition. So, basis the first condition of large cap as a SEBI category, it says that there are 32 large cap funds. Now, my second condition was AUM ranging between 5,000 crore to 65,000 crore. I again go back to the platform, click on this drop down and select AUM. So, I'll put in my minimum amount to my maximum range. And I'll click again on add condition. Right, so basis the second condition that I have input, it is saying that out of 32 there are only 11 such funds that are meeting this parameter of AUM ranging between 5,000 to 65,000 crore. Now next I move on to the age parameter. I had mentioned I wanted only those funds which had at least been in the market for like 5 years. The process remains the same. Click on this drop down, select launch date. Now, I want them to be in the market for at least 5 years. So here I would be editing the end date. I'll make this as 19th December 2019 and I'll click on add condition. Right? Once that is done, our final and our last condition is volatility ranging between 15 to 25%. So I'll click on this drop down, go to the risk parameters, select volatility, and I'll input the percentage of 15 to 25. And I'll click on add condition. Right? So basis all these 3 or 4 conditions that have input from 32, we have come down to just 9 funds. Now you wish to see which all funds have been a part of this query. You just scroll down and click on show 9 funds. Once you do that, on the very right, you could see the list of funds that are meeting the parameters that I have input. And next to the name of the funds, you could see only 3 columns, which are like AUM, launch date, and volatility. The reason why only these 3 columns have come up for each of these funds is because that is the condition that we had input. We had put in a condition of AUM, launch date, and volatility. And because of that reason, only these 3 specific columns related to our query has come up. Now, once you have set or created this query, you also have an option to save this query so that the next time you come onto the platform, you could simply load a saved query. How do you go about is just click on this save this query option, give this a name. So I've labeled it as large December 24 and I'll save this query. Once that is done, all you need to do is click on load saved query and search for your query just right here. Right, so this is one that I just created. I'll click on it and the entire query comes up. All you need to do is click on show 9 funds. Right, now once these funds have come up, you have 2 options. Either you could take an Excel download of the same with all these columns that will come up in the Excel. If not, you could take it to the compare section for further analysis. So in the query section, we happen to filter our funds from 32 to 9. Now let's take this to the compare section for further analysis of these funds with its benchmark or category average per se. Now these funds have been added to the compare section. Now, how do you add in a benchmark or a category average? It's just right here. Add other items is the column that you look upon. You search the index first. Let's say it's Nifty 100 for large cap, since that is what I've selected. I'll click on this and it will get added in as a row item. Next, I will add in the category average. That as well is available in add other items option. I'll add in large cap. So the benchmark and the category average have gotten added in, and you would see that they are highlighted in a different color than that of these funds. That is just in order to differentiate that these are benchmarks and category average, while the others, which are not highlighted in blue color, are respective funds. Now, currently, there are certain data that you see in this green color coded columns. For example, the CAGR, the standard deviation, Sharpe ratio, Sortino, and value at risk. All these data for each of these funds would be since their respective inception date. Meaning, for example, let's say we look upon CAGR. For this UTI large cap fund, it says UTI has a CAGR of 7.6. Now, this is the fund's CAGR since its inception, meaning from the past 26 years, it has been having a CAGR of 7.64%. That is because we have currently taken the funds from the fund section to the compare section. We have not yet input a common start date, a common time period for analysis. And that happens right here. You simply click on this settings wheel, put in a time period of your consideration. Let's say I take it maybe for the past 5 years. So I have taken 20th December 2019, and now I'll click on go. And now you see the parameters have changed right here. What we were seeing initially, the CAGR for UTI large cap has now changed to 15.32. This is specific for the past 5 years that we have input in the start date section. Now, let's say I sort this data basis its CAGR. All you need to do is click on the column heading. The data can get arranged either in the ascending or in the descending order. Now, currently, in this list of funds that I have taken, you could see the best CAGR has been generated by Nippon India Large Cap Fund in the 5 years. It has given a CAGR return of 19.63%. And also, if at all we see that there are these 6 funds, Nippon, iPru, HDFC, Kotak, Aditya Birla, and SBI. These are the funds that have outperformed the category average and also the benchmark. While there are these 3 funds, Franklin, UTI, and Mirai Asset, although they have outperformed the benchmark Nifty 100, they were not able to beat category average in terms of its CAGR for the past 5 years under consideration. Now, let's say we maybe look upon its Sharpe ratio, which is typically the risk adjusted return, and similar type of data is something that we are able to see. These 6 funds, which were able to beat both the category average and the benchmark, are seen on the top in terms of suggesting that they are the funds which have higher Sharpe ratio in comparison to category average as well as the benchmark, which is Nifty 100. Now, once we have looked upon these green color coded columns, we'll move towards the right and we locate these pink color coded columns. These are called the relative columns. Currently, you see that they are empty. That is because they have not yet been activated. Now, how do you activate them is just by doing a click on this relative returns column and the data comes up. By default, the benchmark that gets selected for these relative return comparison is Nifty 50. However, you could change in the benchmark under consideration just by searching for it. So I have selected Nifty 100 right here. Now, one important feature in the relative returns column is that the start date in the relative returns should be exactly similar to what we have set it in the returns column. That is because we wish to do a fair common time period analysis and apples to apples comparison in the returns column as well as in the relative returns column. So in the returns column, I had taken 20 December 2019. I'll set in the same start date right here as well. I'll select 2019 and 20 December. Right? So right here, if at all you look upon cumulative excess, which suggests the excess generated by each of the fund over and above that of the benchmark. So here we see almost all the funds have generated positive excess return over the benchmark, except for Mirai Asset Large Cap Fund. It has generated a negative excess, meaning it was not able to beat the benchmark in the time period under consideration. Followed by that, if we look upon beta, which lets us see how riskier the fund is in comparison to that of the benchmark. So, beta of a benchmark with itself will always be 1, and a beta less than 1 says that the fund is less riskier than that of the benchmark. And currently, for the time period of 5 years that we are analyzing, we could see that beta of all the funds at the moment is lesser than 1, suggesting that each of these funds, in comparison to Nifty 100 as a benchmark, are less riskier. Once this is done, we move towards the rolling returns tab. Now, the rolling returns tells us the consistency of the funds that we are looking upon. So here you could see rolling window is something that has been mentioned, meaning the holding period. For how long are you holding onto each of these funds? Here you could see 260 has been mentioned, equivalent to 1 year on the platform, meaning we taken 260 working days in a year. And here you could see a start date has been automatically picked up by the platform as 23rd May 2008. Now, this is automatically picked up basis the age of the youngest fund in this compare section. So I go back to the main list, I locate the age column, and I'll simply sort this. So you see, in this list, the youngest fund happens to be iPru, which is 16.6 years old. And that is exactly the reason rolling returns will pick up the age of the youngest fund, because the objective of compare section is to do a minimum common time period analysis. However, you anytime have an option to change the dates that you see right here. So let's say here as well, I'll consider the 5-year time duration that we were considering in the main list section. So I'll select December 20, 2019. And I'll click on run. Now there are certain columns, certain parameters that we are viewing right here. For example, the average. So this average suggests what would be the average rolling return from each of these funds if you invest for any 1 year from the start date up until the end date. So for example, we look upon Nippon India, meaning if it says if any investor would have invested into Nippon India as a fund for any 1 year, meaning for any 260 days from this start date of 20 December 2019 till this end date of 19th December 2024, their average return from this fund, Nippon India, would be 26.38%. Now, this column that you're viewing is the average return column. Let's say you wish to see what would be the first rolling return that could be generated. You could anytime go to this line graph and locate the first point on this line graph. So here you could see two things. Firstly, the name of the fund, which is Nippon India, and second, a date of 18th December 2020. Now, if at all you see the date, this is exactly 260 days from our start date, which is 20th December 2019. Meaning, in between the start and this date on this line graph, there is exactly 260 days. Now, what does this data say is that if an investor would have invested into this fund exactly 260 days prior to 18th December 2020, which happens to be our start date, their returns from this respective fund would have been 8.23%. This is a specific points return. An average of all these points return is something that has been mentioned just right here. Now, there are other parameters like high and low that you could see. High suggesting highest rolling return that was generated by each of this fund in the rolling period under consideration, and low suggesting the lowest rolling return that was generated by each of these funds. Followed by that, you could also locate range. Now, range lets you see the swing, the uncertainty that is there for each of these funds. Meaning, let's say for HDFC Top 100, it is saying that it can go as high as 66.46%, but also it can go as low as negative 1.54%. Meaning, it is letting you see the swing between the high and low. And how do we arrive at this range is typically we do an addition of this high with that of low. And then we arrive at this range. Next, that we look upon is this positive percentage column, which lets us see the number of times a fund has generated positive return, considering that there are only two quadrants, positive and negative. So, for example, HDFC 100 fund. 99% of times it says the fund has generated positive return, considering that there are only two quadrants, positive and negative. Now, all these data set that you see changes the moment you change the rolling window. You also have an option to change in the rolling window. All you need to do is multiply the number of years into 260. For example, I wish to see a rolling window of 2 years, a holding period of 2 years. 260 into 2, I have input 520 and I'll hit on run. Now it is suggesting that if you hold on to any of these funds for any 2 year, from the start date of 20th December 2019 till this end date of 19th December 2024, what could be the average return from each of these funds? Followed by that, after rolling returns, we move towards the risk versus return scatter plot. Now, this is a scatter plot wherein on the x-axis, you could see annualized risk, meaning standard deviation, and on the y-axis, you could see annualized return. And the entire scatter plot is divided into four quadrants: low risk, high return, low risk, low return, high risk, high return, and high risk, low return. Now, if any of the fund gets plotted on the extreme left hand side, those would be the ones which have lower level of risk in comparison to the ones which gets plotted on this right hand side. Those will be having higher level of risk. And in similar way, if a fund gets plotted on the upper end of y-axis, it would have higher level of return in comparison if it gets plotted on this lower end of y-axis. It would have a lower level of return. In the risk versus return scatter plot as well, you have an option to edit the time period, meaning the start and end date could be edited and changed as per your choice. Now, let's say I'll again change this maybe to the 5 years that we were considering. You click on go and it gives you the plotting of the funds basis its risk and returns as a parameter. Now, what we could see right here is that the benchmark Nifty 100 in the 5 years happens to be in this high risk and low return quadrant, while all the other funds happen to be in the center or towards the left hand side, meaning in comparison to Nifty 100, they have been generating lower level of risk and at the same time is able to generate higher level of return in comparison to the benchmark. However, there happens to be one fund, Mirai Asset. Although it is taking in lower risk than Nifty 100, it is also generating lower return than Nifty 100. Now, this was for the time period of 5 years that we analyzed. Let's say I'll change this maybe for the time period of past 1 year. So I've taken in 20th December 2023 and I'll click on go. Now, let's say we try to compare these two funds, Nippon India Large Cap Fund and HDFC Top 100 Fund. If we see the risk parameter for these two funds happen to be closer to each other, 14.1 and 14.2. However, the returns generated by Nippon is much higher than that of HDFC Top 100. So, in comparison, while you're comparing these two funds, maybe you could go forward with Nippon because even after taking in higher level of risk, it is able to generate higher level of return in comparison to HDFC Top 100. Now, this data that you see comes in the PPT that you take. If not, you could also take in a screenshot, as well as this could be generated in an Excel format too. So you would be getting columns which shows risk, returns, as well as the name of the funds as well. Right? So the name of the funds come up, the risk column as well as the returns column also come up. This was our risk versus return scatter plot. Next, we move over to position overlap. Now, this tab lets us see the common underlying common stocks between every two fund that we have currently loaded in the main list. This is a matrix structure which shows you the common stocks between every two fund. For example, I have kept my cursor on this 46 percentage. On the left, we could see SBI blue chip gets highlighted, and on top, Franklin India blue chip gets highlighted, saying that these two funds have similar portfolio to an extent of 46 percentage. Now you wish to see which all are the common stocks between these two funds. All you need to do is do a left click. Once you do that, you get a list of common stocks between both these funds. For example, let's say we look upon ICICI Bank. This is a stock which is in the portfolio of SBI Blue Chip as well as it is in the portfolio of Franklin Blue Chip. In SBI, ICICI Bank is to an extent of 7.47 percentage, while in Franklin, ICICI Bank is to an extent of 7.57 percentage. Minimum out of these two percentage is mentioned in the overlaps column, and a sum of this overlap column will come up to 46 percentage, and that is exactly what you see on your screen. Once you click on that, it gives you a detailed split as to what all stocks come under these two funds which are common. Now, these are the overlaps between every two funds. Let's say in this list of all the large cap funds, there happens to be two or three stocks which are common across all these funds. That will show up on this left hand side. For example, HDFC Bank is a common stock between list of all these 9 funds that I have taken in the compare section. You click on this plus icon in each of the fund to what extent HDFC Bank is there as a holding is something that you could see. And again, minimum of these holdings is mentioned right here. We also have given in color coordination right here, meaning lighter greens, darker greens ranging from 0 to 20 percentage, 20 to 40 percentage. As soon as the color keeps on getting darker, it suggests that you need to take in decisions to keep either of the two funds in the portfolio, because they have individual portfolios similar to an extent of, let's say, a 50 or a 60 percentage that might impact the portfolio as a whole. Since currently we are looking upon large cap funds, there is a exception is something that you could see because almost all of them are in this range of 40 to 60 percentage. Next, lastly, we move on to this point to point tab. Now, this is a section wherein you could create in your own customized scenarios and see which scheme could have given you the best final value. So here you could input in a lump sum figure of your choice. Let's say I'll input 50 lakh and I'll create a scenario, meaning you could edit and change the start date as well as the end date. So let's say I create a year to date scenario. So I'll select 2024, 1st Jan till yesterday's date. Right, so I have created an year to date scenario. So the first bucket that you see is a 10-year time period scenario. All these 5 buckets can be edited. The first bucket that I had created is a 10-year time period analysis. You can simply click on this sort and see which scheme could have given you the best final value. There is Nippon, iPru and Mirai Asset. In the 10 years time period, it has generated the best final value. You can view this data in numerical terms as well as you can view this in percentage format too. In CAGR as well, you could view this data. Let's say in the second bucket, I have created in like a 5-year time period. Once I saw this, I see iPru, Nippon and Kotak happens to be giving the best CAGR return in the 5 years under consideration. And in the 3-year time period, we see Nippon, HDFC and iPru giving the best returns. So what we could see right here is Nippon, iPru, HDFC and Aditya Birla happens to be the fund that have been generating consistent return over a period of 10 years. Even in this bucket of 10 years, 5 years and 3 years, we saw Nippon and iPru majorly being in the top 3 list. And if we look upon this fourth bucket, which is like a year to date scenario, the time period that we have taken under consideration, since it is less than a year, you can click on absolute to view the absolute return. And in this year to date time period, if we see Nippon and iPro again being the best performing fund in this lot of large cap funds that we have currently loaded in. Now, this entire data that we see in the compare section can be instantly generated in a PPT, which happens to be the reporting option in the compare section. So this is our compare tab PPT. First page will show you the basic details of the fund, followed by the second page will show you the risk and return specific parameters for each of the fund. The next tab shows you the risk versus return scatter plot with risk on the x-axis and returns on the y-axis. Followed by that, we view the holdings of each of these funds, meaning the large, mid, and small cap split for each of the fund. Followed by that is the overlaps tab, the performance chart, which shows you the NAV movement of each of these funds when they are rebased to 100. Followed by that are the returns, periodic returns, calendar year returns, and the rolling returns. Of course, once you change the rolling window, it will show up according to the rolling window that you have set in. And PPTs on the platform are editable that way, meaning you could add in slides or remove in slides as per your requirement. Let's say I add in a slide and I wish to highlight this point to point scenario. You could either take in a screenshot right here or maybe use a snipping tool, which happens to be a feature of Microsoft. Once that is done, so I'll simply copy this and paste it right here. Right? So such screenshots could be added in as well. You can add in your comments as well to these PPTs since these are editable from the platform. All right, that is it for the topic related webinar. If anyone has any query, you could either unmute yourself or type down your questions in the chat box.
Yeah, good evening, ma'am. I asked a question. How do you increase the time range for this point-to-point?
All right. Hi, this is Prajakta. So, in
Yes,
order to increase or for that matter, modify the time period in point to point, you simply click on either of those, the five windows. There are five windows. You can just edit or modify the date range of your choice in either
my
of them.
question is, sorry to interrupt, but my question is like how to understand which is the inception date of these particular funds. So I want them to reflect from inception.
Okay, since every fund's inception, so in that case, what you can do is you can
Hmm.
simply click on a particular fund. It will get open in a new tab. For example, in this case, what we have loaded is a Nippon India large cap. We've clearly mentioned its launch date that you can see at the top.
Right.
And when you click on change in the start date option, you will see an option to choose inception as the default start date. You can do
Where
that
is
if
it? Your
yeah,
screen. Oh yeah. Okay. Inception.
yeah.
Hmm.
You click on inception and it will automatically start loading the analysis for this particular fund from that time period. Let's wait till this analysis loads.
Okay, so this is only this particular individual fund level, but while doing the point to point, I want all the, say, like whatever 5 to 6 large caps which you had, all of
Yeah.
them to show in one of the window, at least in one of the column, at least with inception, and the other ones as I want to personalize. How is that
Um,
possible?
so, but the problem is each fund will have a different inception date, no? So we cannot superimpose one common date for every single fund that you have in the compare section. Yeah.
Yeah,
We had a list of
that's
large caps. Yeah.
Mhm. Okay, got it. Okay.
Yeah.
I also have one more question is like by default, if I want, if my customer is asking that I am likely to do a 20,000, can you give me
Hmm.
the best performing fund as a portfolio? So is there a possibility that I can create a portfolio and suggest a portfolio?
Yeah, so basically, typically, if you are looking to build a portfolio, you
Mm.
can simply add the funds that you wanted to put in the portfolio by either going to the portfolio section, or there is also option right here in the compare section to convert everything to a portfolio, right? Once that is done,
Is that possible that if you just quickly run through it now, supposing if my client wants to do on the best performing amongst the category of large, mid, and small, okay, and he
so
is ready to
this,
invest
yeah.
a 25,000 SIP, so how do I allocate that value to that?
Yeah, Prajakta, I just don't know. Maybe a simple case, we can go to the fund screener
Yeah.
and just select large, mid, small. Pick the top based on our fund score. Um, so how many funds you have to choose how many funds you want. You clear the compare list here. So we are now in the front screener, and what we're
Okay,
doing is we're sorted by the highest fund score. So that's basically what we have here, and you can basically add um, let's say 5 or 6 of the top funds. Um,
okay,
you might want to skip a few if you're getting too many large cap, so that you can decide. Uh,
okay,
so here, for example, we've added 4 or 5 funds. Now
got
that
it.
it's done, you can go to the compare section for kind of one final look that you're
Mm.
happy. You can, check other things like rolling analysis. You can look at also things like position overlap, that you're not suggesting 2, 3 funds, which are very similar.
Okay,
Once you're happy with everything, you click on convert to portfolio. What this will do is it will automatically save it to the portfolio section here in the folder called from compare. We
mm.
call 58. This is the one that we just saved. So now you can run this analysis. Now, bear in mind that the allocation will currently be, by default, it sets it to equal. So there's 4 funds, so 25 each. But if you want to do some more, kind of customization here based on how the funds are doing, what you
Mm.
can do is firstly, you can check the performance, right? So you just click the performance tab here. Is doing fine. So we go up and you click on the improve button here. That will help you allocate based on kind of recent risk adjusted stats. This gives you 6 suggestions. Where we won't talk about them in detail right now, but 6 from the ranking, 3 from the ranking model, 3 from the value model. Usually the value model isn't bad and it's a bit more balanced. So for example, you can save the sharp value model if you want. And it has a little
Okay,
bit of changes in terms of how it's allocating. And and now you're at a point where you have a portfolio. So
okay. So at this point, I can save that and I can.
yeah, so here you can just click on save. Let's say we change this one. You can
Mm.
change the name here if you want, or you can change the name later. So we've
Okay,
saved it. And now let's go back and the portfolio section, just up the folders and just look at from improve 58 optimized. This is the one we did. So you can run it and now it's saved in your portfolio section. So you can rename it, you can do whatever you want with it. And now you have a ready portfolio that you can, kind of take to your client saying, okay, this is how we should allocate your money.
got it. Right. Thank you.
Right, there's another question in the chat box which asks where are quartile rankings? So on engine
Yeah.
markets, yeah.
Yeah, sorry. So quartile rankings is not something we currently offer. And the kind of the if I'm understanding correctly, you're asking for kind of top quartile, bottom quartile, etc. If that's what you're asking for,
Yeah, correct, correct.
yeah.
Yes.
So we have a more kind of continuous method than a discrete one. With quartiles, obviously, we Top quartile could be 3 funds or 4 funds. So for example, if you just quickly go to the compare section and load, let's say, a particular SEBI category, which is 20, 30 funds or something. What will happen is, let's say it's got 20 funds. Let's load that. So it's got 29 funds, right? So the top quartile will be how many funds? It'll be, depending on the number of total funds in that particular category. That quartile, number of funds in that quartile keeps changing. So instead of putting funds in the top quartile or bottom quartile or middle quartile, etc., what we do is we have a continuous approach where you actually get a sort of ranking, which is effectively our NGEN fund score. So it's much more granular that way. So we currently don't show any kind of quartile information. We know this is quite widely used, but we wanted to make sure that the analysis is open to the lowest granularity we can get to. So in this case, for example, you can see the fund score here. And in this case, instead of saying that, let's pick the best one here. Is it possible to, let's pick the best one here and click on that fund. Now you want to see how it is done in the past, let's say 12 months or something. You can click on the NGEN fund score on the top, and it shows you, how its fund score has been doing. And you can see in 2022, it was down at 5 or 6. Now it's getting closer and closer to 10. So this has actually been doing well. If you were looking at a quartile analysis, you would see a jump at some point whenever it shifted from the second best quartile to the best quartile. So here what you see is much more granular information. So we suggest, this is our suggestion in terms of how to analyze it. The quartile ranking is not something we've implemented anywhere on the platform so far.
Okay, thanks. Thanks.
Thank you.
One quick question. What is the basis of this NGEN scoring? Can you just throw some light?
Yes, of course. So it's completely open. There's no secret to it. So it's an algorithm that we run. We look at 4 simple factors. Basically, AUM takes a small percentage of the factor, so that's about 10%. And the remaining 90 is equally divided between 1, 3, and 5 year. And when you look at the top, there are 3 numbers. There's the main fund score, then there's the risk score, and then there's the return score. And again, the process is very straightforward. The return score is based on pure returns. The risk score is based on volatility only. And the NGEN fund score, which is what you see everywhere, is basically calculated taking both into account. So your kind of risk adjusted performance. And one thing we have done is we've kept the process of evaluating funds the same. So we haven't kind of tailored the fund score algorithm to various different categories, so that you have a clear measure of what you're looking at. So when you see a fund that has a high fund score like 9, you know that its risk adjusted performance is very good compared to the others in that category. And therefore, you can kind of be rest assured that you know what you're getting when you see a high rated fund. There is no other inputs. We don't have any qualitative inputs. Nobody in NGEN is saying that Motilal is better than HDFC or anything like that. This is purely number based. And that's the complete.
Okay, having understood the basis of your scoring, do I have to say it like this? Just let me complete. Is that 9.27 in terms of returns is good, and 3.04 out of 10 is less volatile?
No, so sorry. So we should have cleared that. So 3.04 is a low volatility score. So anything towards 10 will be good. So a 3.
No, I'm talking in terms of risk score.
Risk score, yeah. So when you look at the risk score only, 3 is not a good risk score. And we can see this by going to the compare section, go back to the compare section, and this time sort by standard deviation. Okay, so you can see Motilal is probably lower somewhere, is there, 19. There are many funds which are lower volatility than Motilal. So
that's my question. What is this 19.1 denoting, and what is that 3.107 denoting?
Sure. So the 19.18 is denoting the standard deviation or the volatility of this particular fund.
Plus or minus.
So standard deviation will always be positive. So 3.04 is telling you that as a volatility in its category of mid cap funds, it's not very good because there are other funds that have a better vol. So just scroll with standard deviation again. Yeah, there it is. There are so many funds which have much lower volatility than Motilal Oswal, which is why it is not scored very well from a risk perspective.
Okay, so correct me if I'm wrong. So my understanding of standard deviation, which shows here,
Mhm.
which is the first one over here, 19.05,
Yeah, yeah,
right? 19.87. That means from its mean, it can
yeah.
go up by 19.87 or even minus by 19.87. Am I
That's
right?
correct. Annually,
Right.
annually, annually.
Annually.
Yes.
So again, I'm still not clear about the 3.07 as Motilal as an example. Here it is showing the standard deviation as 19.18.
Yeah.
So on what basis is the 3.07 arrived at?
Sure, I'll tell you. So if you look at the range, the highest volatility, which in our case, when we're looking at risk, is the worst, is 19.87. And the
Mhm.
best volatility, if you scroll down, it is just almost
12.
like 12, right?
Yeah.
So within this range, from let's say approximately 12 to 18 or 19,
Mhm.
um, Motilal is towards the bad end, which is 18, 19, right? So
Okay.
because of that, on a scale of 0 to 10, which we standardize the scale, it's got a bad score. It's got a
Mm.
bad mark, right? So
Okay.
it is only got like 30% or 30 out of 100.
Mm.
So can
That's
you
why
make
it's
the,
going free.
sorry to interrupt.
Yeah,
Can
yeah.
you take the risk score of Bandhan Midcare where
Yeah, yeah. Let's
standard
check.
is, yeah.
Let's check it. Let's check it. That should be high. Okay, so this is coming low. We have to
Yeah,
overlook
so
it
that is
because
where
of
my
right,
query is to, even
right.
though that being low, here is the risk score is also low.
Right.
It's a very young
Am I
fund.
missing something, Prajakta?
Bandhan
Oh, right. That's the
Bandhan
problem.
is a very young fund.
Right.
Um, yeah.
And the AUM is also low. Can you
Yes,
check another one?
yes.
Check another one. Let's go to the compare section. Check another one. Where the AUM column? Let's this Axis mid
Go,
cap. Let's check that.
go to Canara Robeco. I think he has a long track record.
Okay, so see there, it has a lower volatility, but a much better risk score. So again, so what happened here is, let me explain why you got a low score for Bandhan, but high score for this one. The reason is because this one has full history, 1, 3, 5 year. So all three period volatilities were considered. That's number one. Second, it has quite a high AUM, so that will have an effect. But as opposed to Bandhan, if you look at it, there's not enough data. So for example, it doesn't have a 5 year volatility, so it gets no score advantage there at all. And also Bandhan has a very low AUM compared to other funds in its category. So that also reduces the score. Even though the volatility is low, it's not enough for it to get a good score. So one thing you should be aware, for new funds, you will always get low scores. They kind of have to earn their score by staying alive for at least 5 years.
Okay, so let me just conclude, summarize what I've understood from
Yeah.
your fund scoring concept is
Yeah.
the higher the risk score, higher the return score, is your engine also higher? Engine score
Yes,
also higher.
it's a good thing. The higher the scores, it's a good thing.
Okay, so can I ask you for one thing? Just can you just go back to that summary of, I mean, in the compare where you were just
Yeah.
showing that screen?
Yeah.
Yeah. So when we talk about any, can you go on the top first thing? Yeah, when we see, can you sort this engine by the score?
Yeah.
So when we see 9.27, why don't you add one column over here, which will also show the breakup of this 9.27 in terms of risk and returns?
Fair enough. Absolutely. Prajakta, let's put this in our next release. That will be.
Yeah.
I think the main reason we hadn't put it is just space. But we've got quite a few
No,
requests
no.
for
If that
adding
is the
more
case,
columns
no,
here.
see, there are so many things which, because of space, you have accommodated. So these two more columns, I don't
Yeah,
think
yeah,
so
yeah.
will make
We
much
will,
of a
and
difference.
yeah, and plus we also have a column chooser here. So if it gets too much, you can easily just take off whatever you don't need.
Also, one request during within this screen, no, other
Yeah.
than Excel, if you are trying to accommodate it as a PDF, it is or a PPT also makes sense
So we do have a PPT. The limitation which
in
we
this
have is,
particular page.
yeah, so in this Prajakta, let's just can you yeah, sort by age or something, and then yeah, I'll just delete from here. So as soon as you have 20 or less
Hmm.
items in this list, you can get a PPT out, and it has quite a lot of information.
Okay, you mean to say once we remove or count it to 20, then this enable PDF, there's no
Yeah,
PDF option, right? Over here,
so
only
no, so
PPT option is
we
here.
only PPTs because everybody wanted an option to edit.
Got it.
So yeah, Prajakta, if you have a compare PPT somewhere, is this one? Yeah, there it is. So this is what it will look like. So here, before you save it as PDF, because obviously
Mm.
before sending it to a client or something, you will obviously you won't send them a PPT, you will save as PDF, and then it's a nice document to send.
Yeah.
So here you have the option of editing
Mm.
and adding, let's say, one more slide for comments or something like that, and maybe removing some slides if you don't think it's relevant. So that's why we went down the PPT route.
Okay, but at least try to have that breakup of the risk engine score in terms of
That
risk
we'll
and return.
definitely add. We will
Okay.
definitely add that because
I
that
have
becomes.
one last thing to ask you,
Please,
but I
please,
don't know if this question would be apt for this session.
no, please go ahead.
Yeah, there is this pro feature, right? Can we go to that screen?
Yeah, of course. I was just about to mention it, is that using the fund score, the method that we just did, we've
Yeah,
kind of
so I
already
have
done
one
that here.
question with regards to your risk profiling. You just have a set of, can you go to the risk profiling?
Yeah.
If you start your risk profiling questions,
Yeah.
is that possible? You can just show
Yeah.
that on screen.
Something like that. Yeah.
Yeah, so what I understand is I think you have 3 to 4 questions only.
We have 5 questions in total, and each of them contribute to the risk score calculation.
Yeah, so I would suggest you take this as a request.
Yeah.
Just actually just increase it as questions to 10. That gives, and also when you come to the report, you just
Yeah.
give a baseline within 1 to 10 and show me the final result also. I will just tell you.
Yeah.
One is I'm suggesting you to increase the
Increase
number of
it.
questions
So
to 10.
we've already had this request many times, sir. So we are
Right.
already working on
And
it. So
this,
it will become 10.
in this particular assessment, no, from 2 to 10, you're just showing 7.33. I would
Hmm.
suggest you to add something which goes about actually making it easy for the client to understand what is
Hmm.
the 7.33 conservative, high, aggressive
Okay.
as a
Okay.
score down.
Yeah.
So
Yeah.
here, no, it becomes difficult for a new customer at least to understand what is 70.33 that I can do and what is apt for me. That
Got it.
again, I end up telling orally, which doesn't make sense.
So maybe we around the 10 and around the 2, we can probably
Yeah,
write
you
in
give
big
some
letters.
scoring.
Yeah.
0 to 2 is conservative, aggressive,
Okay.
conservative,
Okay.
or super aggressive, whatever. That
Some
way.
more explanation.
Right.
Understand.
So that 10 questions with this summary will really make it excellent tool.
No, definitely. We are definitely adding 5 more questions.
Mm.
And what we will do is, because we had kind of 2 types of requests coming. One was the one that you just gave, that there should be more questions. And
Right.
for others, they wanted a small one because they were complaining that some of their clients, they don't want to finish. It's too long.
No,
So
no,
I think what we'll
let
do is
it
we'll
be a
give you
very
options.
comprehensive, very small question based. It should
Yeah.
not be that lengthy that the customer try to kind of skip or even try to
Yes.
understand and randomly answer. It should be
Yes.
sensible answering. 10, if you want, I can share you a format I have.
No, perfect. So that will be really helpful. Any suggestions will really help us. So
Okay.
we have support at engineresearch.com. If you have any suggestions, please just send them to us, and we will most definitely look into those. So we will definitely add 5 more questions, and give the user the option of using the 5 question link or the 10 question link.
Yeah.
And
And the summary of the scoring should be
yeah,
actually categorized so that that he falls within this, and this is his risk style.
got it. Got it. Understand. Perfect.
Thanks.
Yes.
If time permits, one more question is there. Can
Please
I?
go ahead. Please
Yeah.
go ahead.
Can you go to that comparison sheet where you are comparing now? Right now. Yeah, here. What is this VAR?
So this VAR stands for value at risk.
Oh,
So what this shows you is, Parakta, go to any of your open tabs to the individual. So we're going here, so we can show you the VAR for a particular fund. So you can see here, this is Access Midcap Fund, and these are 2 numbers here. Let's just focus on the historical for a second. What this does is it shows you, VAR is, by the way, is a very kind of well accepted financial measure. Now, this shows you the amount of annual return, as we put in the question mark, that has a X% chance of occurring. So what does that mean? 95, when we say 95 means, it means that there is a 5% chance. Why am I saying 5? Because 100 minus 95 is 5. So there is a 5% chance that this fund can drop 22.45% on an annual basis. And when I say 5% chance, it means if history was to repeat itself 100 times, 5 times, it will lose 22.45 or more. So this gives you a very good idea of a worst case scenario situation. So if I am very unlucky, how much money could I lose? And this is calculated based on the historical returns that you see in front of you. So obviously, the lower this VAR number, the better it is, or the safer the fund can be looked at. So a VAR number is, so for example, if you change this 95, which is the standard VAR used all over the world, sometimes people also use 99% VAR, which shows you an even worse situation. So let's just change that to 99. You see the loss will get bigger. This is 1% of the time, when you get really, really unlucky, you can lose 40% also.
So what's the historical return of the fund or of the index?
So here we are looking at the asset column. So this is showing you the VAR of the fund, which is the blue line. And in comparison, the VAR of the fund is actually better than the VAR of the index. You can see here. So it definitely, this fund, even though it looks like it's outperforming, it has less risk. And you can also see, for example, in volatility, which is also a measure of risk. This volatility, 14.45, and please remember, we always calculate volatility on the basis of daily returns, not monthly or weekly or anything. This is on the basis of every single data point there is. That is 14.45 versus 17.15. So the index is far more volatile than this fund. So as a, versus its benchmark is doing quite well.
Hello.
Yeah.
Yeah, so this VAR is the recent, what do you call it? Recent SEBI, which was mentioning that this should be also disclosed in the fact sheets. Is this the same
I'm not sure. We will
value
have
at
to
risk?
check. I'm not sure. We will have to check the calculation methodology for VAR that we are using may be different, because VAR can be calculated in many different ways. That's why we've included two VARs. There are many different types of VARs as well. So for example, right now we're looking at historical VAR, which is used based on the basis of historical returns. Implied VARs is actually implied out of the annual volatility. So the worse your volatility, the worse your VAR will be.
Okay, so one more last question about your perception about VAR is 1% chances of losing is 39% is what you said.
Annually.
So,
Annually.
yeah,
1
so
year loss.
annually.
Yeah.
So can that be interpreted the other way? It can be 99% of chances of making 61% return?
No, no,
No, it's only
no.
the risk part.
Yes.
Okay,
Yes.
got it.
Yeah.
All
In
right,
fact,
there's an
sorry, just to complete
sorry.
that thought, there is a 99% chance that you won't lose 39%. That's what it means. Right? Because there's a 1% chance that you will. So the other side is not the other. It just said that won't happen is a 99% chance. Yeah, please go ahead, Priya.
Right. So there's another question in the chat box which says, I'm not able to use upside and downside capture as a filter parameter in funds. So that is correct, because in the funds section, these two parameters will not be available, because these two parameters are always or rather calculated with respect to that of a benchmark. Right. Therefore, you can filter funds or rather sort funds on upside and downside capture ratios only in the compare section and not the funds section. Because in the funds section, we do not add any index or a benchmark. We add that only in the compare section. Right. So upside capture of a fund with respect to that of a benchmark. Therefore, these columns, if you see, will also be color coded into pink, which is kind of telling you that these are relative columns. calculated against a benchmark under consideration, right? You can definitely use to sort funds on this basis, but that will happen only in the compare section. Yeah, so there's another question in the chat box. Can this analysis be done on a client portfolio? Yes, or so if you kind of go to the portfolio section, you can run a detailed analysis on a portfolio as well. Alternatively, if you want to move all the funds in the client's portfolio to the compare section for analysis of those funds independently, or for that matter against each other, that also can be done. You simply click on that compare icon that you see when you load in a portfolio. When you click on that, all the components in the portfolio will get added here in the compare section, and then you can use all the parameters available in the compare section for analysis. All right, so there's another question in the chat box which says, can you explain rolling with charts that appear alongside that? So sure. So let's just go to the rolling tab. Yeah. Okay. So now, as Ansu had mentioned in the webinar, currently the rolling window is 520 days. That is, holding period is 2 years. Right now, if you try and hover on the first point onto any of those lines, so this blue color coded line is for iPro blue chip fund, right? And the time period under consideration, that is the start date and end date, is from 2014 to 2024. Of course, this can be edited, but this is currently for the last 10 years, right? Now, if you see the first point on this blue line will be exactly rolling window number of days after the start date. That is exactly 2 years after the start date, which happens to be 22nd of Feb 2016. That means if an investor would have invested exactly 2 years prior to 2016, that is on 24th of February 2014, his return from his investment into iPro Blue Chip would have been a 13.58%. Right now, as you go forward and as you try to hover on any of those points along the line, you will see returns exactly 520 days prior to that particular day. The client would have generated that XYZ number of returns, right? So what we are showing on the table that appears on the left hand side is the average of this entire blue line, right? So average of all the points along the blue line is what is appearing on iPro Blue Chip's first average rolling returns column, 14.33%. So that happens to be the average rolling return that an investor would have got if he would have invested for any 2 year time period, that is any 520-day time period between any of the last 10 years, between any time period of the last 10 years, 14 to 2024. Okay, there's another question which asks, is active versus passive comparison possible? For sure. So by active, you I think mean the regular active funds, and then passive is index funds. So you can definitely load in any of the index funds here and then compare it with actively managed funds. So for example, in this case, we have some large caps. So let's say you want to add in a Nifty 50 index fund, right? So just search for Nifty 50. Yeah, correct. Let's just take a Mirai asset, Nifty 50 index one. Yeah. You click on it, it gets loaded, and then you can compare it with the other actively managed funds. And in fact, we have also covered this at length in a webinar topic. You can definitely find the recordings of this actively versus passively managed funds comparison onto our YouTube channel's playlist for the past webinars. You can definitely view that webinar. So there's another question which asks, can we do any analysis for close-ended funds? Um, Unfortunately, that um, won't be possible. I mean, we do not have that database because those are not available for subscription anymore, right? So those are close ended. There's I mean, you cannot invest more in it. Therefore, by default, they'll not be visible. However, if you have the time series and price series of those funds, which are of course trading maybe, you can definitely upload that as a security in the last tab on Engine Markets and run analytics on those mutual funds as well. So rolling returns, drawdowns, scenario analysis, all of those analysis will be possible. Our database, however, as I mentioned, will be linked to the open-ended schemes only. Any more questions, please let us know.
Is the recording of this session available or not?
Yes, for sure. It will be made available by next week. So all of our past webinar recordings are available for viewing and are uploaded on our YouTube channel. So the link of it is right there into your Engine Markets login. There's this YouTube videos icon. You click on that, you'll be taken to our YouTube page. There's a separate dedicated playlist that is created for webinar recordings. 141 webinar recordings already available. You can definitely choose to view either of them. Of course, this
Oh,
week's
okay.
webinar will also be uploaded by next week.
Okay, thank you so much.
All right, Ansu, I think if there are no more questions, we can close for today.
Yeah, so one thing is after I
Yes.
had upgraded to this
Yeah.
Engine Pro,
Hmm.
my clients' datas are not showing in my login. What do I do?
Oh, okay. I will get someone from the team to connect for a RTA setup. I mean, if that has gotten marked as inactive for some reason, we'll just get that checked. Yeah.
And not even one client, it's like zero.
Yeah.
Sorry,
We will
just
just check.
checking, is this your RTA client database or your manual client data? This is the RTA client.
RTA client, yeah.
Okay, yeah, we'll check it out. We should have it up and running soon. Maybe it's been marked inactive, like Prasad. We'll fix it.
Like if possible, if somebody can connect and do the RTA settings, it will be really
Yes,
helpful.
we will get that done.
Right. Thank you.
Could you please drop your number in the chat box so that I can ask somebody to connect in the next 5-10 minutes?
I already dropped.
All right. Thank you.
Thanks.
Thank you all for joining in. You could anytime visit our YouTube page. We have a dedicated playlist for all the webinars that have been conducted up until now. A total of 141 videos have been uploaded, and this week's video will also be uploaded by next week. Thank you all for joining in. Hope to see you again next week with a new topic. Thank you.